Hi, I'm Giuseppina DiMartino, and this is my value line project on Nordstrom. So the top row numbers for Nordstrom, their recent price was $46.22. The PE was $21.71, which is calculated by dividing the recent price of the stock by the total of the last 6 months of earnings and the estimated 6 months of earnings of the future. Trailing PE was 21.67, which uses the recent price and price of the 12 months of past actual earnings. Median PE was 21.69, relative PE 1.06, and the dividend yield was 3.2%. And the expected return from cash dividends on the stock over the next 12 months is what the dividend yield calculates. The high and low numbers for Nordstrom was 47.26 and 45.99. Now this is the financial ratios box, which includes about 23 items that range from sales per share to all dividends to net profit. Just a quick calculation example from one of the elements of the financial ratios box. I chose to show you the gross margin, which is revenue minus cost of sales divided by revenue. I added the total revenue from 2016 plus the quarter one revenue from 2017, then subtracted the total cost of sales from 2016 and the quarter one cost of sales from 2017. That gave me then I divided all of that by the revenue, the total revenue that I calculated previously, and that gave me a gross margin of 35.9% for Nordstrom. Now this is the capital structure box, which has items that range from total debt to the market cap. Nordstrom is a large cap stock, which can be recognized with their extreme market cap of $7.74 billion. These are their quarterly sales that I've analyzed and estimated. Now I estimated these slightly higher than the value line estimation in April, just because Nordstrom is constantly growing at a slow pace, but still growing. Here are the quarterly dividends of 0.37 for the next few quarters. And I actually kept these the same as it was from the April value line, just because they were previously the same for the past 2 years, and there isn't too much change happening with Nordstrom, so I wouldn't expect the dividends to change. So Nordstrom, their net sales are still growing, but the industry is actually slowing down, so their net sales are growing at a slower rate. And they actually started a new returns policy. Before, the returns policy was you could return anything and everything. Doesn't matter if the tags are still on, doesn't matter if it's been worn. But now they are starting to get more restrictive and aren't accepting things that have been worn and that don't have tags on them. So this could push customers and potential customers away, but it could also save them money in the end, that they're not accepting merchandise that they can't resell. So some recent developments for Nordstrom is that they have so many different types of stores available to all customers. Nordstrom is already a sort of a higher end store, but they also have the Nordstrom Rack option that holds all of their sale and clearance items. And then they also are part of the Trunk Club, which is having a personal shopper shop for you. Some potential plans that they have is different initiatives just to bring customers in, because their industry is going down. No one wants to go in the store anymore to shop, but Nordstrom's trying to start a new initiative that they have drive-by pickup, so a customer can order something online and have the ease of ordering at home, but if they need it the same day, they can just run to the store and an employee will actually run and bring out the items to the car. Then Also, customers can text to purchase, so employees will go around the store, pick items that the customer might like, text the pictures to the customer, and if they like it, they can say yes, and then they'll purchase it. And then also, if you buy something in the store but you live far away or you just can't carry it with you, then Nordstrom will ship it to you. So buying the shares right now might be a little bit riskier just because online shopping is taking over and all of those new initiatives that Nordstrom's trying to put in place haven't been fully put in place yet. So there is still potential for the future with those new initiatives, but currently it's definitely still risky to buy shares. So the timeliness number ranks the price performance, and I kept it the same as April's value line estimate as 1, and it's on a ranking of 1 to 5. So 1 is the best. The safety number estimates the total risk of the stock, and it also compares it to other value line stocks, which is 1 being the safest and 5 being the most risky. So Nordstrom is actually ranked at 3, and I've kept it the same just because, again, there has not been too much change with Nordstrom. So it's just an average risk. The technical number predicts the future price returns of the stock within 3 to 6 months, so it's really just in the short-term time price returns. So it's on a scale again of 1 to 5, 1 being the best, 5 the worst. And I gave Nordstrom a 4 and kept it the same as April just because within the next 6 months, online shopping is still a big deal, still very popular, and those new initiatives aren't going to be implemented yet. Nordstrom's financial strength is a B++, and that's on a scale from A++ to C. So Nordstrom is pretty average when it comes to financial strength, but it's that scale and that pricing and that ranking is actually very difficult to change. So having it move up or down is unlikely right away. For price stability, that's on a ranking from 100 to 5, and 100 being the best. And I ranked Nordstrom as 50 just because the industry is in the middle of a change because online shopping is becoming so prominent in people's lives. So it's difficult to tell which way Nordstrom could be going just because their initiatives could work and then they also might not at the same time. So the growth persistence of Nordstrom, this analyzes if the stock is going up, and I rated it at a 65 out of 100. Nordstrom is still is growing, but the rate keeps slowing down, and that is probably because of the change in the industry of online shopping. And earnings predictability. So I gave Nordstrom a score of 70% out of 100, 100 being the best. And this shows that Nordstrom is somewhat reliable when it comes to the earnings that they have, but I think with the change again in the market and since they can't implement all of their new initiatives right away, I think their earnings predictability will go down from a 75 to 70. And the in-store shopping industry is just not solid right now. Thank you for watching.